Anti-Money Laundering, a Pantomime of Pretence. I have now produced well over 70 videos, but I haven't yet talked about anti-money laundering, AML, a topic that has intrigued me for well over 30 years. My present view of this topic has been greatly influenced and expanded by the research of my good friend, Professor Dionysios Demetis, in particular his book Technology and Anti-Money Laundering, a systems theory and risk-based approach. And in the many conversations we have had on AML over the years. His most important theoretical contribution to the subject is that he views AML not as a set of tools and war stories, rather as a complex adaptive system. Furthermore, he argues that while AML systems are extensive and costly, their effectiveness is limited by both structural and systemic constraints, not just the shortcomings of the technology being used. But more of that later. Money laundering is the process of making money obtained illegally appear legitimate. Typically, it involves three stages. The first, placement, introducing illicit funds into the financial system. Then comes layering, a complex set of transactions to obscure that money's origin. And then finally integration, reintroducing funds as apparently legitimate wealth. Increasingly, computer technology is being used as a tool for detecting laundering. However, the criminals are countering with the same technology that undertakes the laundering and also evades detection. Criminal proceeds may come from drug trafficking, fraud and cybercrime, human trafficking, corruption, a whole load of things. The goal is not just to conceal, but to make the money look legally acquired so it can be used to fund further crime or for it to enter the legal economy. Estimates suggest that as much as between 2 and 5% of global GDP is being laundered annually. Some suggest as much as $5.5 trillion per year. Only about 0.1% of illicit funds are being recovered, with as much as 90% actually going undetected. Clearly, despite the scale of the AML effort, this is minimal recovery. The UK is particularly vulnerable because of its role as a global financial centre, its use of corporate structures and property markets, and its high integration with international finance. It is estimated that annually around £100 billion is being laundered through the UK. The US, with its large financial markets, its extensive cross-border flows and complex regulatory architecture, has around $300 billion laundered annually. Now, I must stress that these figures are just estimates. They're guesses. Nobody really knows the true scale of the problem. Dionysios highlights the problem of modern AML relying on what's called risk-based regulatory frameworks. The key tools being used are, number one, customer due diligence, CDD, also known as KYC, know your customer. Customer identities are being verified, risk profiles assessed, with identification of and extended checks on what are perceived to be high-risk clients. 2, then comes transaction monitoring. Automated systems flag unusual behavior, and these are increasingly AI-driven. 3rd comes suspicious transaction reports, STRs, also known as SARs, suspicious activity reports. Financial institutions are obliged to report suspicious activities. 4th comes information sharing between banks, regulators, and law enforcement. 5, asset freezing and confiscation of suspected criminal funds. And finally, over it all comes regulatory supervision, national and international frameworks such as the FATF standards, the Financial Action Task Force. Dionysios describes AML as a socio-technical system involving technology, that's programmable monitoring systems, institutions, banks, regulators, and compliance officers. Being a system, he says AML will always create emergent phenomena that do not fit into such predetermined bureaucratic analyses. Regulators require firms to take a risk-based approach, focusing on high-risk activity. There are problems here. Risk is uncertain and not well understood. Subsequently, firms will interpret risk differently, leading to inconsistent applications. So, what exactly is risk? According to international standard ISO 31000, risk is the effect of uncertainty on objectives. That's not very helpful. Nevertheless, risk managers like to give the impression that they can model such effects using statistical techniques. They collect together masses of data, historical and recent, and then process it in search of regularities, which they subsequently measure and use to measure risk. As I have said in previous videos, I do not agree that risk is some objective statistical thing out there. It's not the effect of uncertainty. It is not something we capture. Rather, it is what we produce to help us deal with uncertainty. Risk is an output. We project patterns onto uncertainty, thereby sampling it, and then data feeds back to us to help us manage the perceived risk. Risk and its data depends on the structures we impose on uncertainty. Different structures mean different risks and different data. Unfortunately, these structures we introduce will themselves generate new uncertainties, for which we must then generate new risks and new data ad infinitum. So within all this uncertainty, Dionysios highlights a crucial issue: inefficiency. Great inefficiency. AML systems generate vast amounts of data, most of which is low quality or irrelevant, with so-called defensive reporting and a low signal to noise ratio because of a large proportion of false positives. He also highlights the systemic way criminals operate within a feedback loop that counters every new attempt at AML control. Dionysios is very critical of suspicious transaction reports at the centre of data collection. UK banks file hundreds of thousands annually, which supposedly provide intelligence to law enforcement, but which the reporting institutions see as giving them legal protection. Admittedly, in a few cases, a very few cases, they enable asset freezing. However, and it's a big however, an emergent phenomenon has appeared in every bank. They all oversubmit STRs as a defense mechanism just to avoid liability, resulting in huge numbers of low-value reports. Law enforcement gets swamped and fail to process the information. Very few STRs lead to investigations, prosecutions, and asset recovery. Most of what little success is achieved is because of whistleblowers. Dionysios argues that STRs create a ritual of compliance. They show adherence to regulations, but do not necessarily disrupt crime. Yes, large sums are seized annually, and there is an increased coordination with regulators. Indeed, there has been some increased transparency, for example, beneficial ownership registers. But major limitations remain. This has evolved into a stable ecosystem in which banks spend over $60 billion annually on AML, but only a tiny fraction of illicit funds are recovered. And that fraction doesn't return to the banks, but to the authorities. Meanwhile, criminals are getting cleverer. Professional money laundering services have emerged in the criminal underworld, moving money across jurisdictions and entering new sectors like real estate, cryptocurrency, digital assets, deepfakes, and other AI-enabled fraud. At the same time, on the legal side of the conflict, witnesses in supervision persist, and reforms, although ongoing, are nowhere complete. To complicate matters, AML is being equated with the combating of terrorist financing, as if the systemic ambiguity within AML wasn't enough on its own. Authorities now insist on adding an approach that has a completely different funding structure. Much of terrorist funding has a legal origin in the form of donations by sympathizers, often at a national level, of sympathizers of the terrorist causes. So what can be done? Money laundering operates annually at $1 trillion scale globally. Banks apply AML, extensive AML systems, but they are structurally constrained. In particular, measures like STR are necessary, but they're insufficient. That is why Dionysios insists that AML is not a problem to be solved. Rather, it's a complex system to be managed. His key challenges are not the addition of more, possibly better technology, rather information of a better quality, better coordination, and a more realistic expectation of what AML can and cannot achieve. According to Dionysios, AML is not failing because it is weak. It is struggling because it is confronting a global problem that is constantly adapting and is inherently systemic. I contend that a completely new approach is needed, with an end to this pantomime of pretense, that the authorities are actually doing something about the problem, that they're actually achieving something when they're not. The $60 billion annual spend on AML, this bureaucratic pantomime of pretense, is no joke. The money comes from the bank's bottom lines, that is, from extra charges to their customers, namely from you and me. If only a fraction of that money was spent on proper policing and providing substantial rewards to whistleblowers for concrete information, then we would see effective action. Meanwhile, anti-money laundering remains a tale told by an idiot, full of sound and fury. signifying nothing. Thank you.